Thank you, and it's a pleasure to be here. I think just to echo the earlier comments about the weather, I know we're supposed to be hardy, but I'm done with it already, and winter hasn't even started, so I think I'm in for a long run here. Speaking of a long run, I've got a pretty wide view here. I'm going to take us through the current industry, and then we're going to look at what's happening in the near to midterm, and then all the way out to what we call the long autonomous future. Before I do that, just a quick little note about LMC Automotive. Our business development team, who isn't with us, certainly would be upset with me if I didn't share a little bit about us. So we are in the space of market intelligence forecasting. We look at it from a regional as well as a very global view. I'm going to give you some insights on our global take of where the industry is. We have analysts around the world really focused on those local issues to bring the whole world together. So if there's anything we can do to help you, there'll be some contact information at the back of the presentation. So as I said, we'll start with the current industry, look at some electrification trends, and then the long path to autonomous vehicles, which may be an indication of what we think of it. So keep that in mind as we go through the presentation here. To really set the stage, wanted to take a view of what's happening globally. So this is looking at the global marketplace this year relative to last year. So again, a very current view. And I think the key things to point out here, there's a lot going on. The real big issue is the direction. So since January, there has been a pullback overall in most of the regions around the world. You can see the world expectation is for, it's actually just under 1%. It rounds up to a 1% increase. It's only 500,000 units. This has really deteriorated from about a 2 million unit increase that we expected at the beginning of the year. So you can do the math there. It's about 1.5 million units out since the beginning of the year. I'll talk about what's going on with trade and how that's impacting the industry overall. But as you can see, as you look around the world, we've got some pullback from the beginning of the year. South America, a little bit weaker, although I think with the election behind the Brazilian market, and we'll see if Argentina hits bottom, it's still an 8% growth rate after a double-digit last year. The real story, I think, is China. So China, we've got down about 1%. Certainly some trade implications going on there with the consumer. There was an expectation the government was going to put an incentive program in place at the beginning, or excuse me, at the end of the year. They are not. So actually, we'll probably see a revision even further down than the 1%. North America, the key market here, obviously, we've had a slight revision upward since the beginning of the year, primarily in the U.S. market, having to do with increases in fleet volume. But it's still a slight pullback from where we were last year, and I think that deterioration is expected to hold into 2019. Western Europe, relatively flat. I'll talk about what's going on with Brexit. In Central and Eastern Europe, some of that having some sanction impact with Russia pulling the volume down there, but it's still about a 1% growth rate. So from a segmentation standpoint, taking a very broad view, I think the trend that we're seeing here in the region in North America is something that we see globally. So it's a SUV story. SUV is about a 9% growth rate expected this year. That equates to about almost a 35% market share when we look across the regions. So that's the global view. It's certainly much stronger here in the U.S. and in North America, but it's a market that's growing really in all regions and all markets, whether it's a mature markets of Japan, Korea, Western Europe, and the U.S. We're also seeing growth in South America. So when you look at the volume increases in South America and look at what's happening in the ASEAN market, in Eastern and Central Europe, the SUV story holds. When you look across where that's coming from, North America, we see it almost entirely out of the car segment. When we look at it relative to the world, though, we see a play really between cars and MPVs and minivans. So there's a much stronger pull from those other segments into the SUV market. The other markets, looking at pickup trucks, so we see growth. It's relatively flat here in the U.S., but globally we see some growth in pickup trucks, only about 2%. We see premiums actually up, globally speaking. In the U.S., premiums are down. Part of that, I think, is the transition from cars to SUVs. But overall, the story is holding around the world as far as where the growth is concentrated. So what are the issues in the short term that we're looking at? Trade is taking a big center stage, and I think geopolitical issues are certainly holding. I put a check mark with USMCA. It's not a done deal yet, but it looks to be a done deal, assuming there's a signature from both Mexico and Canada on that. So I think we'll move on from there. Likely some pricing and certainly some cost issues, whether it transfers over to the consumer and the consumer is impacted from a volume standpoint or a decision standpoint, is yet to be seen, but certainly there will be some cost increases as a result of the new local content rule, as well as the labor rate increase, at least for part of the assembly of vehicles, primarily, again, targeted at Mexico. Moving over to trade and tariffs, certainly aluminum and steel has had an impact. We've heard what both GM and Ford have talked about, essentially $1 billion hit potentially this year as a result of those tariffs. If we look below that, we still hear the drum beating out of Washington related to imports on parts and vehicles, anything made outside of now what I would argue is the USMCA or the North American region. But I think there's still a lot of risk associated with that. Maybe a little bit less that it's going to happen than it was earlier, but certainly I think as you look at the focus heavily weighted towards China, deals with the EU and Japan still have to get done. South Korea was able to get done, so there's still some major areas of import volume coming into the region here that are under pressure. So just to kind of put in a target around it, if we looked at an EU-focused tariff on vehicles, a 25% tariff, and assuming some of that gets passed on to consumers, maybe some of it gets absorbed, could lower U.S. volume by a couple 100,000 units while that's taking place. So again, a fair amount of risk in a market that's already in a decline or at least a leveling off. Brexit. Brexit getting a lot of attention right now. Theresa May says she has the deal ready for vote. They're now potentially looking at a lack of confidence, so they're trying to rally the party, the Tory party around that right now and could actually push Theresa May out. So I think the tensions are certainly increasing as we come to a head there. We've increased our probability of a hard Brexit, which would really be temperamental primarily on the UK market, but it would have implications elsewhere, to about 40%. So it's pretty equal between a hard and soft Brexit. We'll obviously see how that plays out, but there already is certainly, it looked like a global issue earlier to a Euro issue, and now it appears to be mostly focused on the UK from an implication standpoint. And then, of course, regulation. That's the other big area that we're looking at, globally speaking, and here in North America as well, certainly with the U.S., the midterm review on CAFE, the issue with the California standards, so CARB essentially suing the EPA, the trying to really bring those two standards together into one single standard is really what's at issue here locally. You've got other things going around in other parts of the world, though. You've got the EU looking to really constrain CO2 emissions, but last year actually emissions rose. So that puts the mandate in the midterm out to 2021 under some pressure. China, of course, government is really pushing the NEV vehicles or anything that's plugged in, and so that's battery electric as well as plug-in hybrids, into a 2019 credit, so that's driving certainly a lot of investment and activity in that space. So again, a lot of moving parts here affecting what happens in the near term. Taking a little longer run out to our standard forecast horizon, this is looking at global production. We do see about a 2% growth rate out to 2025. You can see that growth rate, though, isn't equal when we look across parts of the world. So it really is an emerging market story here when we look globally. So Asia, and that would obviously include China, Asia, South America, and even Middle East and Africa are growing at a rate much stronger than the mature areas of Europe and North America. North America expected only about a 1% growth rate when we look back last year to 2025. However, we do see some lifting of that volume, about a 1 million unit increase when we look from around 2020, 2021 to 2025. So there is quite a bit of sourcing still coming into the North American market, driving some of that growth. From a utilization standpoint, we continue to put the mature markets, so Western Europe and North America, into the healthy category. It's that magical 80%. North America coming down from from 85, or even in 2016 it was post 90% utilization, which really wasn't a sustainable level. So we see it coming down to a pretty healthy level. You see the investment bringing it down under 80, but holding at 80% through the longer term. In the stable range, we've got Asia Pacific and Eastern and Central Europe really getting up into the mid-70 range there. So again, that's relatively stable and pretty healthy. The risk areas continue to be those emerging markets, Middle East, Africa, South America, right now hovering below 50%, both of those two markets. So a lot of risk associated with sourcing decisions, new investment coming into those regions. They're very underutilized at this point, so that's where the risk is certainly focused. Let's take that and focus a little bit more on what's happening with electrification. This is the big area, I think, in the midterm range here. And really, we look at this from now out to 2030. But to take a look at what's happening in the current environment, this is a snapshot of various markets around the world. You can see the U.S. In the first half of 2018, you're essentially looking at a little over 3%, 3.5% growth rate, or excuse me, market share. And that's split, obviously, a heavier focus on the hybrid and plug-in vehicles that would include plug-ins. The pure range BEVs in the U.S. are under 1%. You see the contrast that around the world. You've got China, that NEV focus that I mentioned earlier, really starting to push the electrification, mainly with BEVs, and we'll see that split out when we put the plug-ins in it as well later. But certainly growing to north of 4% from a market share standpoint. The other big movement that we've seen is in Europe. And Europe has been a story of both plug-ins and full hybridization, including milds. But we're starting to see the full battery electric vehicles edge up. It's only 0.9% now, but we're seeing a lot of model activity starting to drive volume growth there. And that gets you a world that's about 1.5% BEV, and then another 2 almost 3% electrified through hybridization. So it's a market that's in transition right now. A lot of model activity starting to drive that. We've got a comment here, since we didn't put Japan on there, but Japan is still a very different market, mainly driven by hybridization. So you've got almost more than a third of all vehicles right now have an electrification element to them. And again, most of that is through full hybrids and mild hybrids. So if we focus just on battery electric vehicles, this is what the breakdown looks like in 2018. You have a very strong domination in China, with almost 700,000 vehicles are full battery electric. It's that government push. A lot of investment coming in from a volume standpoint. You see a big push in the model count here in China, but also focused in driving activity and growth in the U.S. So you see the U.S. and Europe are actually very close right here, essentially at the same point. And this is really the backlog of Tesla starting to drive that volume in the U.S. much higher than it would have been otherwise. So once that's all cleared out, I think we'll get a better indication of where natural demand is. Through back orders are delivered, and I believe that they're talking about making those deliveries now through the end of the year. But nonetheless, I think when you look at total electrification, Europe is starting to really focus on that post-diesel scandal and will pass the U.S., which I'll take a further look at. From a model standpoint, this is what the top 10 models look like. Again, globally speaking, it's a heavy domination of Tesla models. So you've got the three main, the S, X, and Model 3. Model 3 jumps into the third position here. From a global sales standpoint, you've got the new Leaf doing well, but China continues to dominate. So the Beijing EC is the top-selling model, 40,000 units. Again, obviously that's all in China, but we do see continued growth of models in the marketplace here from where we were last year, and that will continue to take place as we look into 2019. There's quite a few introductions coming in Europe, so we'll probably see additional European models enter this space. Long term, this is what the market looks like. Again, looking at the BEV market, so this is taking us from 2017 to 2030. Big growth numbers here, primarily with China and Europe. You see that domination. So China was about a little over 60% of BEV volume in 2017. It falls pretty substantially, but the volume growth is immense. So Volume growth is about 25% CAGR. You've got Europe almost a 30% growth rate out to 2030. The U.S. does finally cross, or we expect it to finally cross the million unit level, but really not until the late 2020s. So speaking of the U.S., this is looking at the volume specific to the U.S. market, and you can see the growth rates. You've got this massive increase in the HEV, the hybrid electric vehicles. Most of that growth to the 2 million unit level is going to be in mild, and this would include 48-volt systems. So a lot of increase dominating there. You see the BEV, obviously, BEV line increasing as well. So a lot of new entries coming in. We'll go from roughly 17 BEV models last year, so well over 120 by the end of this horizon. So again, it's all about that options and model entries that are coming into the marketplace driving that growth. And you've got the plug-ins growing at really a similar pace as well. So pretty substantial increase there. And again, depending on what happens with the emission standards and with CARB, really the plug-in growth is the California initiative driving that. So again, focusing just on battery electric vehicles out to 2025, this is what it looks like. And we've highlighted our view of Tesla. So you've got the massive growth of the Model 3 launch taking place again this year, 2017 into 2018. We've got a continuation of growth with new models coming with Y and the pickup potential as well. And then it essentially flattens out. So we think the market is going to really get much more competitive for Tesla. Certainly have proven that they have the right product and the right mix right now. And obviously also proving that consumers are willing to pay for those products from a cost standpoint. We start to see that erode next year as their credits dissipate. So again, it's going to be more expensive to buy a Tesla next year and into 2020. Much more competition coming. So we see their share falling pretty substantially. They're about 70% of BEV sales in 2018, and we see that falling to under 30% by the end of the horizon, and really kind of holding off in that 200,000 unit range. So from a sourcing standpoint of electrified vehicles, this is what it looks like for North America. So we've got a little bit different of a breakdown here I just want to point out. So you've got these are the plug-in electric vehicles. So this would include your full battery electric as well as your plug-in hybrids up in that first area. And then you've got your hybrid vehicles as well as your mild in the second section. So we've got a pretty consistent view out to 2025. A lot of growth from a volume standpoint in both of these areas. But share-wise, it's pretty consistent. A little bit increase in import activity. Again, some of that is the competition coming in where it was previously Tesla dominated. On the hybrid and 48-volt system, you've got a lot of imports coming in primarily from Japan, Europe as well. So that drives that sourcing stronger in the North American region. So it falls from about 60% import to under 30% import. So with that, why don't we take a view at the overall long-term picture. And just to kind of set the stage, we certainly follow the SAE standards in this. When we looked at autonomous vehicles, what we're going to focus on is really level 4 and level 5. So that is essentially the fully autonomous or highly autonomous vehicles in certain circumstances where drivers are not needed. And that's level 4, and then level 5 being basically no driver needed in any circumstance or any road condition. I think to set this, what I wanted to do is focus a little bit on kind of where things were a year ago and where they are today. If we look at the Gartner hype curve or the hype cycle, and look at where autonomous vehicles are last year, they were really past peak. So essentially the hype of AVs from our standpoint really peaked out last year. If we fast forward into this year, so the curve this year, we see a separation of level 4 and level 5. So level 4 is actually well past peak and starting to get into the trough of disillusionment. And I think the separation then of level 5 has been pushed way back. So I think this is a real change in the marketplace and starting to look at those two technologies differently. And the deployment of level 4 is certainly taking place now and starting to expand as we look at city centers and some of the testing going on in many parts of the world. but level 5 is certainly much further out than I think previously anticipated. So from our standpoint, when we look at what needs to be solved in this space, these are the areas that we focus on, and this list is not exhaustive. It's meant to really show the 5 main areas that we focus on: the vehicle itself, some of the external issues, obviously the consumer, the human factor, the framework around litigation, legalities, insurance, privacy laws, and then obviously the commercial impact and vehicle cost and infrastructure is a big issue as well. Some of these areas, legacy vehicles, there's expected to be 1.2 billion vehicles on the road globally, and those vehicles are either going to need to interact with AVs or get off the road really for high penetration of AVs on a global basis. So a lot of issues, even something, and it sounds silly, but AV bullying, and this is a consumer messing with an AV by either jumping out or throwing something in front of it to try to trip it up. These things are happening, and certainly as there's more of them out there, it will continue to happen. So let's look a little bit further in some of the issues. So this is looking at probably not too different than some of the roads that we might have to deal with here, hopefully not on the way back towards the Detroit area. But you know, on the left here, you've got obviously a road that's completely snow covered. Where is the road? So AVs are going to need to be able to deal with that. They can't right now. You've got another situation here. We have a few potholes, I think, in Michigan. So you've got potholes filled with water. It looks like a flat surface. These probably aren't the monster potholes that'll swallow a car. We have those, and if that's full of water, it's going to look like a road, and it isn't a road. So you could have a lot of damage to the result of this. So these are things that the AV needs to deal with just from a seeing standpoint that I think certainly isn't quite there yet. Some of the other issues, and these were tested, all of these were misclassified by the deep learning systems. So you've got angle problems with signs, again, trying to read how the signs are impacting traffic in intersections. You've got graffiti issues, if there are graffiti on the signs, the context of where is that turn taking place, or just issues with again distortions on the sign itself. All of these things tripped up the systems. They will get there. There's no question in my mind that, but these are causing some delays, I think, in the overall deployment of the system. This is actually from a video, and it's hard to see here, but let me describe what's taking place. You've got two individuals talking well off of the road, and this is a Waymo AV that sat and is sitting at that intersection there making a turn, and waited a full 15 seconds to try to figure out what those two individuals are going to do. Are they going to cross the road? Are they sitting there? Are they going to jump out in front of me? Are they going to throw something? So again, it from a safety standpoint, I think in testing that's what you want the vehicle to do, but it also suggests that we're not quite there yet. You can't have a vehicle just sitting and waiting 15 seconds before completing a turn when there's really nothing in front of it. So I think some of the other areas going on, anyone been to New York recently, you've dealt with congestion, I think, in Manhattan, caused by certainly the Ubers and Lyfts of the world. So the sharing vehicle model is certainly causing some issues, and I think that service in the impact of that, whether it's a full congestion or the fact that it really is adding to the total miles driven, is certainly something that's under fire and will continue to be in various areas. So whether it's sharing models not being allowed in cities or being blocked from expansion, and that's really what's taking place here, where the mayor of New York is essentially halting new Lyft and Uber rides. So again, it's an issue that needs to be solved. The integration between this, the scooters that have invaded cities around the world, including Detroit, the impact of that and how that's all playing into the sharing in the transportation model is certainly something that I think is also going to be taking a toll on the overall deployment here. Speaking of deployment, we're looking for a very slow rollout, and really one that's focused. If you look at these systems, these are really targeted at moving people from places like airports or city centers, again, to other places to either get them to their regular vehicles or to get into another public transportation system. So around the world, all of these areas, we see a lot of focus on the first and last mile. Again, the Rotterdam has really been in deployment for quite a few years, and that's having a further expansion with the To Get There group. So I'm not negative on AVs. LMC is not negative on AVs. We just think it's further out. So all of this is going to happen for all the good reasons that we think AVs are there. And safety obviously is a big area. Looking at the shared model and kind of that integration with existing transportation systems certainly will help with congestion, but if we look at what's taking place today in cities through this transition period, there's going to be some growing pains associated with that. Looking at obviously vehicles being used more effectively for the cost of them, the parking situation, certainly getting people that aren't able to have transportation or be mobile today to allow them to be mobile. All of these are really helping to expand the technology and create more services. So just a couple of slides here on our overall view. We really put a split between shared AVs and owned AVs. So from a forecast standpoint, when we look at this, this is what our scenarios are looking like. We did this earlier this year. We're going through a revision of this now, and what I will tell you is we're probably pulling these numbers down even further. Our central forecast, though, is looking for, it's about a 25% growth rate from 2030 to 2050. Under 70 million units total globally by then. We've got it split between three scenarios. We call it constrained, our central view, and then a breakthrough. And you've got a pretty wide range. You've got about a 4 to 10 million unit range in 2030. And then globally speaking, the range widens up to around between 40 million and 90 million vehicles globally speaking. So again, quite a wide range, a wide band of uncertainty on deployment. But certainly going to be different around the world. When we look at the split here between shared and owned, you've got a high concentration and growth of shared through China, through Europe. Obviously, you see the growth in the U.S. as well, but it's certainly more pronounced in China. On the owned side, you would expect that to flip, and it does. Much less owned AVs in China. You see a big push in Europe with, again, the premium brands and premium market driving growth in North America here as well. Tying it all together, this is what it looks like. So the line on the top here would represent what our forecast was before AVs. So you're looking roughly 140 million units out to 2050. The impact then of AVs, so you've got the level 3s falling off, you've got the shared and owned coming on, where shared represent about 60 to 65% of AV population out to 2050. It's about a 9 to 10% pullback in overall top line volume. So that's kind of what we're looking at from an overall forecast standpoint. I'll leave this with you. Generally speaking, though, real quickly, the short-term picture is favorable, but has deteriorated somewhat with risk. The U.S. is in a good position, and sourcing coming back into the North American region will help. AVs are much further out. And with that, I'm happy to take some Q&A. Thank you very much.
How many of you know Lori? Raise your hands. Not many. Well, about a third. So if you don't know Lori, I would encourage you to get to know Lori at a break or at lunch. Lori has a long experience in a lot of different areas, and again, like Jeff, there aren't a lot of people where I say they know more about the supply chain than anybody, and Lori's one of those people. So, and I don't get paid to say that, although I might want to.
You do.
But Lori, you want to come up and do some Q&A with Jeff? Thanks.
So the first question I want to tackle is, you talked a little bit about the 232 automotive tariffs on parts and vehicles. What do you think will be sort of the extended effects of that? And ultimately, I know you talked about 150 to 200,000 units, but there's a lot going on about the forecast, and will the forecast go below 16 million? Can you talk a little bit about that out sort of 19 and 20?
Yeah, of course. So we obviously look at this in a scenario environment because there's a lot of moving pieces, and I think it's very fluid as far as how this ends. But generally speaking, I think when we look at the near-term horizon, we've got in the local market, we've got a really strong economy right now, likely to pull back a little bit next year.
You've got an environment of rising interest rates. You've got used car substitution. All of these, these factors in some cases are balancing each other out. And then you throw the trade and tariff risk on top of that, and it does create an environment that is certainly difficult to predict. That being said, I think assuming we don't get any massive change in the structure or implications from new tariffs, we're looking at a slowing of auto volumes. So in the U.S. Next year, 2019, we're looking about 16.9 million, 17 million, so a couple 100,000 units. We do have it by 2020. There's a little more risk, I think, of a slower economy 2020, 2021. So we're kind of in the, what I would say, high 16s, 16.5, 16.7 range is kind of what we're looking at now. And obviously that spills over to the production side. I think production overall has been managed pretty well from an inventory standpoint. So inventory is in good shape, mostly around the market. We had the transition from cars to trucks, and that was a bit painful, but I think the market's over that now. So I think generally speaking, we're in still pretty stable environment. There's risk, but it's pretty stable.
Do you have a feeling that the administration will pass this tariff, or what is your thought? Do you think it's, I realize that nobody's crystal ball is really clear, but.
It changes by the tweet, I think. But I think it's very difficult. I don't think we're going to see them, but it really just comes down to it's all negotiation right now. So I think that's been made very clear that regardless of the short-term pain and the what side of the fence you stand on, this is a negotiation tactic, and if it gets people to the table and gets the deals done, the industry will move on. If it lingers, I think that's when we start to get into some problems. Right now, our base case forecast would not expect that, but that certainly is a risk.
Okay. So let's talk a little bit more about autonomous. Of course, Waymo had this recent announcement of a full-scale rollout in terms of level 4. So is that getting closer from your perspective?
I think level 4 is, which I think when you looked at the the hype cycle, that I think was really a tell here that the industry was looking at autonomous vehicles previously of kind of rolling those two together. I think you've got a very different, and over the last couple of years, we've seen this ebb and flow where you've had a lot of different strategies, some focused on moving up through the levels. You had announcements of skipping all the levels and going just to level 5. And I think the industry is starting to really come back from these different views. And while the development and the technology and the R&D is still pouring into level 5, I think you've got a convergence of level 3 and 4. So we're going to continue to see further deployment of level 3 and some of the safety implications there, the advancements. But I think level 4 is really the focal point now. So I think, the deployment of level 4 is realistic. It's not going to be there for everyone in every situation, but I think we'll certainly see more of that in this, the standard horizon that I mentioned, like out to 2025. The numbers, in our view, will not be there. They're going to be a rounding error still. But we will start to see them and have them on the roads more than the test markets they're in now.
Okay. As it relates to EVs, of course, there's a lot of new models being launched in the next, couple of years, up to 2025 and beyond. Where do you see EVs in terms of their domination of powertrain in the future? Is there going to be more of a balance between EVs and the ICE engine, or where do you see that, and when do you see it?
Yeah, if you look far enough out, we definitely believe that. I think when you look at the full spectrum of EVs, in the market here in the U.S., if you go out to 2030, we're still only about 20% electrified from our forecast. If you extrapolate that out to 2050, then you're getting into a space where ICs at some point may become only available with a hybrid system on them. So you may not see an IC only by 2050. So that's, those are the things that we're modeling right now.
looking much further out. I think that in Europe is much more of a realistic view. It might lag here in North America, but I think that's the prospect that we're looking at. So not quite balanced in this, transition period, but we're going to see pretty strong exponential growth of EVs.
Okay. So you talked about the sedan market. We all know that sedans are sort of really dropping and CUVs and SUVs are launching. So as you look forward, are we going to kind of hit the bottom of that market? And if so, or even with the current drop, who's most affected among the OEMs in North America?
Yeah, I think we're starting to get towards that. I don't think it's going to be a slow trickle, I guess, is a better way to put it, as opposed to completely reaching bottom, I think, of the sedan market. So we do see sedans continuing to be an important market. It's roughly still 4 million units a year here in the U.S., so it's still a viable market. I think one of the interesting things that happened recently, and that is Toyota, who initially said we're committed to this market, they're starting to change their view a little bit and said that they're looking at maybe deploying more SUVs and maybe cutting back on sedans. So I think we're going to continue to see that. It's a transition that's taking place, but we're going to get to the point of saturation in SUVs. I mean, you're essentially there now. You've got a lot of products still rolling out, but you've got pretty much any size, price, off-road, on-road, variation that you want right now. So I think growth is going to slow in that, which means growth out of sedans is also going to slow. So we're not quite at the bottom though.
Okay. So last question, and then we can ask more during the panel. But you have suppliers here, right? So you've got both tier 1 and tier 2, tier 3 suppliers. Can you talk a little bit about what you shared this morning? What's the impact on them? What should they be thinking about in the next 3 years, 5 years as they plan their business?
Yeah, I think the biggest impact or the biggest view is with all of this competitive pressure, whether you look at it of the transition from sedans to SUVs or out of certain body types to SUVs, you've got the EV coming in as another competitive component. You've got other manufacturers that aren't here yet that will probably be here, and then obviously the Chinese is a big element there. That's all dependent on trade and getting things sorted out. But I would say with all the competitive pressure and things being fluid, the biggest thing is be flexible and understand your customer and know the market and where they're going. Because I think the struggle is there's going to be volume pressure down at the model and program level. And I think to maybe diversify and get into areas that you're not in now. Don't rely on one customer. It's diversification. Obviously, it goes without saying, but I think it's going to get even more intense. We've been moving down this path of a competitive situation, but we're getting competition from a lot of different areas. And I think one of the things that the industry is looking at now, and you look at that with the GM cost-cutting decisions that they're talking about, that's going to affect programs in this near to midterm horizon, and they're trying to pay for AV development because AVs, and I think this is another sign that maybe it is going to be a longer road. There's no return on that right now.
Right.
It's all a giant money sucking sound. So I think that's going to be a key test: is how do you invest in the future and still keep your current operation viable.
Okay. We're going to talk more about that restructuring stuff in the panel. So join me in thanking Jeff for speaking.
Thank you.
Okay, we're going to take a 15-minute break. Before we do that, I want to do an exercise that somebody did at a meeting I was at yesterday at General Motors. It was about the same size group. How many people here drive a pure EV? We've got one, okay. How many drive some form of hybrid?
Oof.
Wow.
How many drive, I know where this is going, a truck or an SUV? Right, there you go, break time.